Hello and a warm welcome to Personal Finance. I'm Gugulethu, Cele. In studio, I'm joined by Nitesh Patel, Head of Customer Financial Solutions at Personal Banking at Standard Bank. Farrell Berson, who's from Genesis Advisory Services. He is an executive elite financial planner there. And in our Nairobi bureau, Frida Owinga, Chief Executive of Business Coaching Consultant at Passionprofit Limited. Now, today's makes for an interesting conversation where we're going to talk about accurate preparation for potential job losses, which we do know affects many Africans across the continent. And we're going to get perspective from both the east and the southern part of the continent to paint a clearer picture and hopefully give consumers like yourself some sound financial advice. Ladies and gentlemen, thank you so much for joining us tonight. Perhaps let's start in the south and work our way into the east. If you give us a quick overview, Farrell, let's start with you with regard to job loss and inadequate financial preparation from a lot of consumers who get impacted by this.
Yes, well, a famous quote comes to mind from Benjamin Franklin, which I was talking to a colleague about yesterday. And if you fail to plan, you plan to fail. And I think that's really where everything starts at the end of the day. And, you know, being on the ground every day, seeing clients all the time, that I'm never surprised by what I see. And there is no planning in place. So that's where it starts with, actually, in terms of the job loss, is preempting and preventing and planning for such an event in one's life. And that's where it starts in terms of the preparation and the planning. And when I sit down with clients and I assist them in terms of getting proper structures in place to ensure that when that inevitable, horrible day comes, that they are ready for it.
I'm happy you use the word inevitable because for so many South Africans, speaking from the local environment, we often have this perception that it won't happen to me. You're still young, or you have all the negative or the necessary pointers which need you to be able to be employed. So often people feel as though, I don't need that cover. Job retrenchment might happen to someone else, right, Nitesh, and not me?
Yeah, so I think firstly in the context of the current economic environment, the risk of job loss certainly is high. Every time the news comes to the fore, you hear of companies wanting to retrench or restructuring. So the preparation that Farrell alluded to is absolutely important, and you do it as soon as possible. Ideally, you should start when you start your first job. So when you start working, you start your financial plan. But if you can't, it's never too late, and you start immediately. So the planning is critical in this process.
Planning critical. Frida, let's come to you in our Nairobi bureau, maybe just to paint a picture of what the environment looks like on that side of the continent. But is there efficient planning when it comes to potential job losses and adequate retrenchment cover?
I think it's pretty much the same everywhere in Africa. People are losing their jobs because of restructuring and retrenchment, but they're not prepared. So preparation is key. And I like what he said, that preparation right from the day you start the job. A lot of people are caught unawares. So whether there's going to be retrenchment or not, one day you will retire. So it's important to have a nest egg that you're keeping aside every month, a future plan for when you're not on that job. What do you plan to do? So those are some things that people should be thinking about before the paycheck is cut off.
Frida, just to stay with you for a moment, how should we be accurately planning for this then? And I want us to look at the budgeting for this before actually looking at products and innovative solutions that are available on the market. Is there a particular bracket or a percentage that individuals need to be saving just to ensure that they have that necessary financing should they potentially lose their jobs? Because the fact of the matter is life happens and there's so many things to save for. And for many people, it's not for the dreaded day where they potentially lose their jobs.
I normally recommend that first an individual should do a personal audit. We help people transition from working into starting their own businesses. And what we do with them at the beginning, because it's a 12-month process, at the beginning we see how much do they earn, have they been saving at all, what is their lifestyle like, are they living within their means or are they living above their means? So that's where we started. So based on how they have been living up until the point they want to start saving, that will determine how much they can save. So it will vary from one person to another. Some people may have a higher debt, that they need to deal with, on time and try and get rid of it as much as possible before they go out on their own. Some people may have children in school that the company is paying for. They need to start thinking of, if anything happens, how will I be able to keep the children in the same school? Is there an insurance that I can start, paying towards that can help me when that kind of day comes? So It really varies from person to person. So the first thing we recommend is you do an audit, and after we do the audit, that helps us determine how much money you need per month to, you know, to keep you afloat. And out of that analysis, then now we can say, for you to have X amount by the end of the 12 months, you need to save X amount. And in that savings also, we don't just have a flat saving, putting it in a savings bank. We also try to see, based on the amount that will come out of that analysis, are you able to put some in the stock market? Are you able to invest? What kind of investments can you pick up so that at least you get a good return at the end of the day? So there are many factors that we look into.
Thank you so much for that, Frida. And we've got a financial planner in the house this side as well who's nodding her head in agreement.
Yes.
Farrell, it takes us back to that initial analysis and planning. But I think for a lot of consumers, for them to actually face that reality is difficult because there's so many elements eating away at your money.
Yeah,
it's retirement,
so.
It's insurance for the necessary
Yes.
products. You want to also purchase assets, hopefully, which also comes at a significant cost. So
Yes.
one needs to obviously take a very serious and hard look at
Yes.
their financial position. But
Yes.
is this also an opportunity to invest in the appropriate covers and policies that might be in place to take care of the lump sum payment you might need should you lose your job?
So the answer is definitely yes. But the problem is that when you're engaging with clients on a day-to-day basis, is that they actually don't know where to start. They don't know who to turn to. And that's the big issue a lot of the time. So the role of the intermediary actually is it's a fundamental in terms of getting into people's lives, in terms of helping them to achieve their goals. And when I sit down with the client and I start that analysis, that audit as Frida was referring to, for me it's as basic with some clients to sit down with an Excel spreadsheet, have a look at what their fixed costs are every month, have a look at their variable costs, because the fixed costs you can account for, you know what they are. They're medical aid, they're school fees, they're DSTV, etc. The variable cost is what really hurts people. And the thing is, if they don't have a plan in terms of, well, is it a need or a want? Do I need to go and spend X amount on over and above what I need for the month? Or hang on a second, I have a little conscience on my shoulder called Farrell that says, well, maybe at the end of a review period, okay, maybe we don't hit the goals because I haven't had that discipline. And I think the fundamental around planning is review. So it's great to have a plan, but then what? Okay, it's great to acquire a product, it doesn't matter where you acquire the product from, and companies today are impressive with their marketing strategies. But who is there once the product is implemented to sit down with them and review? Number one, is it the right product for them? Number two, has it met their goals? Okay, and this is where the lack of education comes into it. And one of my passions obviously is around transfer of knowledge. It's around passion. It's about looking after people to ensure that we understand their personal goals. As what Frida says, everyone's different.
Yeah.
And we make sure that we achieve what they want to, at the end of the day, achieve in their life. And it's an amazing process to go through that. But review is incredibly important on a frequency. And clients do ask me, how often should we review? So my answer to that is whenever there's a life-changing event. Okay, it could be a loss of a job. It could be a baby is born. It could be we're getting married. It could be we're about to buy a house, buy a car. Everything has a financial implication in life. Who do they have to turn to saying, I need some advice. What do you think? Where should I get finance for this? I need to save money for education. What are my options? People don't know where to turn. The internet as a South African culture, I think we're still got a way to go. And we're very intimidated by so many options on the internet. So that interaction on a one-to-one basis is still so relevant in a South African context. So that's what I do on a daily basis in terms of helping people to realize those objectives.
Exactly. Nitesh, before we come to you, one of those elements though that I want to pick your brain on, Farrell, has to be risk, right? And especially when it comes to the topic of a potential job loss. Like I alluded to earlier, those who are younger tend to feel that they're more indispensable versus their older counterparts. But how does that also play at a spanner into the works when it comes to financial preparation for job loss and choosing the right policies and covers?
Yes. Well, firstly, there is no formula to prevent and to prepare for job loss because you don't know when it's going to happen. So the key is...
And the key thing, you don't even want it to happen, right?
Definitely not. But the key is you need to have some strategy in place, that you have a diversified portfolio that, number one, looks after yourself, protects yourself. We call that wealth protection. You're protecting yourself as an individual. In the event that something happens to you, an impairment, a disability, that you actually have some form of income to prevent you having to basically wrap up your entire life. The second part is, while you do have that job, is to take some money aside every single month and make preparation for that. I do sit down with clients where they say to me, Farrell, I'm bitterly unhappy in my job. And I'm saying, hang in there. Do you have another option? No. Make provision, because when the day comes, at least you have created some nest egg to accommodate for a time period where you actually go into the job market. But don't leave yourself high and dry with nothing, where you're going to have to sell your house, sell your car, start realizing assets that you have accumulated over time. That would be a shame. So planning in that is also fundamentally important.
So what we can take away from this part of the conversation so far is that planning is clearly quite imperative.
Yes.
But I want us to touch on some of the product offerings that are available. And for some other people as well, they tend to shy away from investing in these particular products, because in South Africa, we know that there's a UIF, Unemployment Insurance Fund, which pays out should you lose your job via being retrenched. But there are also some terms and conditions that apply there, including maternity leave. Nitesh, just to pick your brain quickly on that element of things, is this perhaps where South African consumers get lazy and we think, oh no, you know, the government will give me a portion of a payout back, so I don't really need to invest in a separate product?
Yeah, I think it's extremely important to consider one's own personal financial situation. And Frida alluded to the fact that you do your self-audit on yourself, and that gives you an indication of, you should always be aware of what the UIF would pay you out and when it would pay you out. On the flip side of that is there are three elements, or what to consider. There are three elements in your plan for preparing for job loss that you should consider. The first one is savings. So you should always be aiming to cut back on unnecessary expenses and put some liquid cash away. So we say having 3 to 6 months income in the bank gives you a good safety net and some peace of mind. The second one is insurance, and under insurance the one is you get various insurance products to cater for retirement, to cater for retrenchment, and to cater for disability or injury. And then there's credit-related insurance products. So there are various credit-related insurance products for the various debts you have, and those give you installment cover. They cover some of your debt. They cover some of the installments for a defined period whilst you are retrenched or whilst you don't have a job. And then the last component is debt, and you should always be aiming to eliminate any or as much short-term, high-interest-bearing debt as quickly as possible. So within the context of those three variables, you should consider your own financial situation, what your lifestyle seeks to achieve, and then how much cover do you need over and above that to keep your lifestyle at bay.
Exactly. I'm happy you touched on debt, because in my mind I can hear all the consumers there saying, but I like my credit card. But we'll get into that in a moment. We're going to take a short ad break. When we come back, we continue with our conversation, taking a look at adequate financial preparation before you potentially lose your job. We'll be right back. Welcome back to Personal Finance. I'm still joined by my guest, Nitesh Patel, Head of Customer Financial Solutions for Personal Banking at Standard Bank. Farrell Berson, who's from Genesis Advisory Services. He's the elite financial planner there. And Frida Owinga, Chief Executive of Business Coaching Consultant at Passionprofit Limited. Now, just before the ad break, we got into some of the key issues that consumers need to take into consideration when it comes to adequate financial planning for potential job loss. But I want us to paint a picture and maybe understand the kind of products that are available on the market. And I understand, Farrell, you've got some interesting facts and stats as to the role of income protection cover. For many people in South Africa, it tends to be a grudge purchase, because it's a little money that you need to put away just in case that day does come when you lose your job. Is it quite prevalent in South Africa versus other markets?
Most definitely, in terms of income protection, is prevalent in South Africa. I did a bit of research in Australia, New Zealand. It's also quite prevalent. In the rest of the world, not quite. And not as comprehensive and as well defined as it is in South Africa. And one has to understand that when you're investing in risk benefits, income protection is just an ancillary benefit to the bigger picture of your portfolio. You know, it's attached to your life cover, your dread disease cover, your disability benefit, and your income continuation. The income continuation side of that benefit is actually probably one of the most expensive benefits within your portfolio. Because if you can think about it, it actually provides probably the most important benefit in the context of your life. Because we plan for the fact that in the event of something happening to you. You know, the definition of this income protection is really in the event that there is some form of disability, whether it's temporary or a permanent nature, that this policy will kick in and pay you on a monthly basis. Now, within the market, they go about many different names. So that also unfortunately confuses the consumer in terms of there's income disability, there's income continuation benefit, there's permanent health insurance, there's a whole host of different names. So people actually don't know what they're buying into. So that presents a bit of a challenge. Therefore, the education side is critically important. And then if you look at the finer detail on these products, one also needs to understand how appropriate and applicable it is for that specific person. Because products nowadays are fully customizable, if I can say that, is because everyone has different needs. So the various companies are very good at basically marketing their products with different branding and different levels of cover. So one needs to know, how do you actually accommodate that product for that specific person? So the income continuation benefit, which is an interesting, historically used to be just cover impairment or disability. So you'd have to be medically justified not to be able to work in order to claim a benefit. Then some companies really came up with some amazing innovation, and they combined the income disability with the sickness benefit, whereby it's not necessarily have to be disabled or impaired. One actually just needs to be medically justified sick in order to claim the benefit. And to consolidate those two benefits into one has proven to be very innovative in today's market and quite applicable, as you can imagine. So there's certainly a lot of competition in the market in terms of companies running at the forefront in terms of offering these type of benefits. And then when do these benefits kick in? And how do they kick in? So there's a lot of complexity to these things. So therefore the role of that intermediary is absolutely fundamental when it comes to planning for income protection. And legislation has also changed recently from the 1st of March in terms of how income disability or income continuation is treated from a tax deductibility. Beforehand, that premium out of your portfolio was tax deductible, and nowadays you insure for the net effect of your net salary of your income protection. So the governing rule was around 75% of your gross salary was you could claim for income protection in terms of a benefit, and now it's 75% of your net salary. Okay, so it's changed around totally. So people really need to keep up to date with the changes in legislation. Very, very important.
I'm happy you touched on some of those T's and C's, because even some of the payment periods aren't that long. In some cases, what, 3 months, 6 months?
Yes, those are called defined waiting periods. Okay, so if you have a look in terms of, it starts from a potentially a 7-day waiting period if you're professional, to a 1-month waiting period, 3 months, 6 months, 12 months, and even 24 months. So the company would actually wait that time period before a payment kicks in while they assess your situation, which is also an important thing. There are companies that will start paying you after that waiting period, and until you are deemed to be permanently disabled, that monthly benefit obviously will kick in. And also there are companies now that pay on permanent upgrade, they will actually increase that 75% to 100%, which is a really great innovation in terms of what's happening in the market.
And like you say, you need someone to decipher all of that for you.
Yes.
Nitesh, I want to come and pick your brain. As you alluded to, sometimes you need to have a different savings pot and come up with innovative ways in your own capabilities to cover the shortfall if you don't get paid for the full 6, 12 or even 24 months. And maybe that's where creative forms of group savings come into play. As we know, in South Africa and across the continent, they're informal forms of saving, but also people can make use of financial institutions such as the one that you represent to make sure that there is something else on the side.
Yeah, I think, like I said earlier, part of your plan has to incorporate savings and having some liquid cash available. And from a banking perspective, we certainly provide a myriad of savings and investment products, and a lot of them are cash-based investment products. So you go from a 1-day call to 7-day call, up to 32-day notice deposit accounts, and then we've got fixed deposit accounts which run from anywhere between 6 and 24 months. And that, I guess, the call accounts provide you with the flexibility of having cash available, but obviously your interest rate differs from the period in which you invest. So the longer you invest for and keep your money invested with us for, the better your interest rate and the better your return.
So people need to be quite aware of that as well. But Frida, to come to you as well, maybe if you can paint a picture as well. We obviously understand that the environment in South Africa when it comes to income protection is quite advanced and mature. Is it the same in Kenya? And if not, what kind of innovative solutions are consumers coming up with in order to cover their shortfalls?
One of the things The only insurance that I can think of that can help you if you lost your job is maybe if you had a life plan insurance that doesn't mature at death. So they have some plans that can mature after 10 years, after 15 years, based on how much you want. So that could be an option, but again, not a very good option because you never know when you're going to be retrenched. One thing that I have observed that is working for people or people are using here is group investment methodology, where a group of people come together, maybe 10 or 20 people, and they save a certain amount every month. And you find that even the financial institutions have products for such groups, because you can find a product that says, if you've been saving together for 3 months and the 3 months it has been consistent, on the 4th month they can lend you a certain amount of money based on your earnings. So people are using this approach to start businesses, and we are seeing that changing the economic landscape. People are using the group investment methodology to buy land and start housing developments. They're buying buildings, they're starting manufacturing companies, and this helps them start something before they're retrenched from the job, so they have something to fall back on. So that is one thing that I've seen that is common here that I haven't heard from, from the conversation we have had so far.
Time for our all-important segment, Notes to Self, where we get the key takeaway points from tonight's conversation from our guests. Nitesh, if we start off with you, what do consumers need to bear in mind when it comes to adequate financial planning for potential job loss?
I think there's often little you can do about losing your job, about to lose your job, but you can certainly do a lot about preparing for the eventuality. And those would incorporate savings, so ensuring that you have 3 to 6 months income in the bank, insure a number of insurance products to ensure you have the right kind of cover to protect you, and then elimination of short-term expensive debt as quickly as possible.
Mm-hmm. From your side, Farrell?
I think educate yourself is of paramount importance. Find yourself somebody who you can trust, that has your best interests in terms of giving you the guidance based on their experience, that when that day does come, that you can make sound financial advice and not to cut in the wrong places, because I see that happen frequently, is that people cancel insurances and medical aid and because they don't know where to turn to. So, yeah.
Rather cut the luxury TV connections, huh? Or your fetish for pretty shoes. But to come to you, Frida, your key takeaways for the viewers watching this evening.
I think we can't overemphasize the importance of planning ahead. And I highly recommend somebody investing in a good financial planner to work with. We use financial planners when we're helping people transition out, because they look at the numbers and the numbers tell them a story. So work with a financial partner. They will help you, they'll keep you accountable that you're sticking to the plan. And then I think have goals, but it's important that we have goals. What do we want to achieve in life, so that we're thinking beyond the paycheck? Otherwise, we're just caught up in getting that paycheck and the next month and the next month. But when we have goals, then we start thinking bigger than the paycheck, and we even start thinking, how can we make our dreams come to pass? Then we won't be driven just by the paycheck, but we'll start looking beyond the paycheck and how we can make our dreams come to pass.
Well, insightful words of advice there from all of our guests this evening. But unfortunately, we do have to leave it here for Personal Finance. A big thank you once more to Nitesh Patel, Head of Customer Financial Solutions for Personal Banking at Standard Bank. Farrell Berson from Genesis Advisory Services. He is the Executive Elite Financial Planner there. And Frida Owinga, CEO of Business Coaching Consultant at Passionprofit Limited. Do be sure to keep in touch with us. You can send us your tweets, comments and suggestions on Twitter at CNBC Africa using the hashtag Finance410. Until next time, have a wonderful evening.